Hello everyone, welcome to today's US Open live webinar. It is Tuesday, January 24, and we're 10 minutes before US markets open. This is your host, Nikos Zabouras, Senior Market Specialist at FXCM. This is a very busy week with key upcoming economic releases and the earnings season in the US in full swing. So we'll be talking about that. We'll also take a look at the outlook of Netflix after last week's strong quarterly results. We'll also talk about the prospects and expectations around the Fed following last week's commentary by officials, as we're now in the communication blackout period, and many other things. Before we begin, however, as always, please read carefully through the risk warnings and the disclaimers, and then we'll get the ball rolling. Once again, please read through the disclaimers and the risk warnings carefully, and then we'll get started. Okay, let's get the ball rolling. We have a packed session today with a lot of things to talk about. So this week, markets continue to price in another downshift by the Fed after we saw no pushback against market expectations for a smaller 25 basis points hike next week. And this, of course, was right after poor US data, both of which are supportive for a slowdown by the Fed. Now, the current week started with poor preliminary PMI data from the UK, and GBP USD is under pressure, and the stock market there as well, because the services sector contracted for the first time since July, and as we said, this weighs on the relevant assets. Now, relevant figures from Eurozone were a bit, and we also have seen a series of hawkish commentary by officials from the European Central Bank. Now, Wall Street started the week strong, but is cautious today ahead of key economic releases and earnings from the likes of Microsoft and Tesla. We have already posted a preview of Tesla's earnings on our YouTube channel, on FXCM's YouTube channel, and on the respective FXCM market analysis web pages of your respective regions. And we're also going to talk a little bit about last week's Netflix results and the technical outlook. So we view now Euro USD for our charts. As always, we'll start with this pair. So let's see where we stand. Now, Euro USD runs its fourth profitable month and set 9 months highs yesterday. Monetary policy is supportive, as the Fed is expected to further moderate the pace of tightening. Markets price in a 25 basis points hike next week, and various Fed officials have embraced that, and we haven't seen any meaningful pushback against that despite the hawkish stance. Now, on the European Central Bank front, policymakers have pointed to more 50 basis points moves in the upcoming meeting and the next as well, such as Mr. Knott and Mr. Casimir. Of course, these are, let's say, northern central bankers. Down the south of Europe, we see central bankers being less hawkish. Now, in any case, the technical outlook has not changed much from previous analysis. The pair is on track for the 1.0942 resistance, but it may be early to talk about further advance beyond 1.1067. Now, despite the solid start to the week, we see a mixed week actually. It faces difficulties today, and it had rejected yesterday this area that we mentioned just before. So a further pullback below 1.08 around this region here would definitely not be surprising, but a strong catalyst would be required for further losses and daily closes below the key 1.06, 1.0609 region, where among other things we have the exponential moving average, the 200 exponential moving average. Of course, daily close below this level would pose the bullish momentum, but as things stand now, bulls are in control, and expectations around monetary policy from both the ECB and the Fed are supportive for the pair. Now let's turn our focus to GBP USD, which stays in the offensive this month, but is off to a negative week and slides after today's UK PMIs that we said this showed that the service sector contracted for the first time since July. Last week, headline CPI had eased in December, but it still remains well in double digits territory, while the core inflation was sticky and it was unchanged from the prior month. Divisions among the central bank policy makers and murky guidance create an uncertain environment for the pair, but it is helped by the weakness in the US dollar due to optimism for a Fed pivot. Now, this is today's slide here on the back of the PMIs. That makes the pair vulnerable to this region here, which is located at 1.2180, 1.2150, although a catalyst would be likely needed for a bridge that would bring 1.2 in the spotlight. Overall, the pair looks well protected on the downside. Despite the difficulties this week, the British pound has not lost the initiative and can set new highs towards 1.25, but we're cautious about further advance towards and beyond 1.2667. Now, let's leave Forex behind us. I want to take a look at Netflix. We're still 2 minutes out of the US Open. This is NFLX.US. So the stock had a very bad year, although during the second half, things improved in terms of stock performance, but also of news and reporting from the streaming giant itself, whereas the stock is off to a strong start to the year. Last Thursday, Netflix reported encouraging results with the addition of 7.66 million users in the fourth quarter, much higher than the 4.5 million the firm had projected. Now, we had in our preview of Netflix last week, we had talked extensively about the new ad-supported tier, the lower priced subscription plan that includes advertisements. Now, the company did not disclose how many users came from that subscription plan, but said that it is pleased with the progress. Revenues grew 3.9% year over year to 7.85 billion, but were the lowest on a quarterly basis for the year. Now, the stock, you can see here that it got a boost from these results on Friday and starting this week strong. It tries to take out 38.2% Fibonacci of the 2021 record highs to the of the drop from those highs to the May multi-year lows, and we also have the formation of death cross. We have talked other times, both through this venue, but also on our written content about death crosses. It's when a faster EMA crosses above a slower EMA, and it is generally considered as a strong precursor to further advance. Now, above the 38.2% Fibonacci, the road could open for further gains towards 459 region, and potentially even more. Of course, we're looking at the daily chart at the broader time frame and horizon. Now, on the other hand, we see that the relative strength index moves to oversold levels, and this can create pressure. A breach of the 200 days EMA here around 300 mark could be reasonable, but further slide would need a catalyst. In any case, bulls are now in control in the near term, again in the near term, but for now the correction is limited as long as it remains below the 38.2% Fibonacci level. But on the other hand, the current environment is supportive. The second half of 22 was brighter, and the tech sector in general is trying to recover, and after a very bad 2022. So that's it for Netflix, and we'll talk later on about this week's earnings from the likes of Tesla and Microsoft towards the end of the session. But first, I want to go to the Nasdaq, the NAS 100 here, as we're already 2 minutes into the US session. We're back on a 4-hour chart. Now, NAS 100 comes from a 2-day rally. You can see here on market pricing for a smaller hike next week by the Fed, and hopes that it won't raise them as high as its own projections suggest. Bulls have the ability to push for the December high around this region here, 12,224, but it's probably early to talk for further gains towards and beyond 12,467. The tech-heavy index faces pressure today ahead of important earnings and other releases we will talk about, economic release that we will talk about in a bit, and it slides towards this region here, 1235, 1135, 11246 would not be unreasonable. However, we would need to see a significant deterioration in sentiment for this level to be breached and to have daily closes below this area that, of course, could put the recent advance into question. So that's it from the technical outlook. As always, we will now talk about what's coming next in terms of releases. So within the next few minutes, we expect the PMIs from the United States, the preliminary PMIs. This can, of course, affect both the dollar and Wall Street. We have seen strong reactions, or at least relatively strong reactions to such data. And on Thursday, we have the first reading, the preliminary reading of the Q4 GDP, again from the United States. Q3 final was 3+ % annualized growth, after 2 quarters of contraction, and we also expect durable goods. We'll have the chance to talk about that more on our next session on Thursday. And of course, after that, we also expect PCE inflation from the United States. Now, on Wednesday, we expect inflation figures from New Zealand and Australia. For New Zealand, the last report, the Q3 for the third quarter, had moderated a little bit, but remains close to 32-year highs. Whereas in Australia, headline CPI again for the third quarter had posted the highest annual increase since 1990. Now, we also expect the Bank of Canada on Wednesday. The BOC has slowed the pace of tightening with 50 BPS hikes at the previous two meetings and actually provided very soft wording in the last one. It said that it will be considering whether the policy interest rate needs to rise further. As such, another downshift in the pace of hike, potentially 25 BPS increase, would be likely. And given this wording, I wouldn't be surprised if there would be a pause, although that does seem to be premature, and it would be against baseline expectations by markets. And with that said, let's move on to US earnings. Microsoft is expected today after the US close, shortly after it had announced a reduction in its workforce. It announced that it will lay off 10,000 employees, and we have seen similar action by other tech giants such as Meta, Amazon, and others. Of course, my main focus will be on Tesla, which is due on Wednesday. We have already, as I said, posted a thorough preview on FXCM's YouTube channel and the FXCM market analysis websites of your respective regions, so you can go there for more information on that, for more insights. It was a roller coaster 2022 for the EV giant. There were some high points, but also some low points. The main concern is around demand, because there was a widening gap in Q4 between production and deliveries, despite new records. And of course, the company missed its target for the delivery growth on a yearly basis. So that's it from today's session. Again, a very busy week. We thank you for joining, and we'll talk again on Thursday, 10 minutes before the US Open at 14:20 GMT. Thank you again for joining.